Down 77.8% in 2022. Is Peloton stock a buy for 2023? I'm going to answer that question in this video, so stay tuned. The first thing I'm going to look at is Peloton's revenue growth quarterly year over year, going back before January 2020. And what you saw, of course, was that explosion in revenue growth right at the onset of the pandemic when gyms closed and many exercising facilities closed. Buying an in-home exercise machine became incredibly popular. Sales for Peloton boomed. People were waiting up to 10 weeks just to get their bikes delivered to their homes. And it just all around excellent business for Peloton. Revenue grew over 200% at one point. But you have to remember that wasn't the first time Peloton's revenue grew so quickly. For the 6 years even before the pandemic's onset, Peloton was growing revenue 100% year over year. So it was an incredibly popular product even before the onset of the pandemic. The pandemic just put fuel on the fire, and unfortunately, it turned out to be bad news for the company overall because the existing management at the time just became overly confident in the business's long-term prospects, made some massive investments in its manufacturing facility. It acquired a company for $400 million. It made an investment in its own manufacturing facility for $400 million. It expanded existing operations in existing facilities. It expanded internationally. It launched several new products. And so it was just overconfident and overzealous, thinking that this boom during the pandemic is going to last forever. And that was its ultimate undoing there. And it turned out that as soon as economies reopened and gyms reopened, people were now less interested in buying Peloton bikes. Revenue growth slowed down and even turned negative, and has been negative for a couple of quarters now, going down to negative 23% year over year in its most recent quarter. And so it's been all downhill from there. The CEO resigned. There's a new CEO now. The company's made major changes, and it's a big mess over there. And there's no telling if all of these changes that the new CEO is implementing is going to work, and all that remains to be seen. So let's look at its operating income, and a similar story where the boom in the pandemic led to some operating profits for a couple of quarters, but ever since that, when revenue started slowing, it started to lose a lot of money on the bottom line, as much as 500 million. In its most recent quarter, it improved to a loss of 200 million in its most recent quarter. And then let's look at cash flow from operations. And it was on a nice, healthy upward path until, of course, all of those changes during the pandemic and then the slowdown. And now it's losing a lot of cash and burning through a lot of cash from operations. One, two, three, four, five, 6 quarters in a row of negative cash flow from operations. And that is troublesome for this company because let's take a look here. It has only 938 million of cash on hand, and if you look at its most recent quarter, it lost 200 million in cash from operations. And looking at that, we can do the math here. It doesn't have very much time if it keeps losing money at the current pace, right? Only about between 4 and 5 quarters of runway of continuing to lose money at this rate. So it's got to stop these losses from cash flow, or it's got to raise some capital. And one way it can do that is sell through some of its inventories. Its inventory exploded as it ramped up manufacturing, thinking that this sales boom was going to last. It actually ended up just adding up to their inventories. It now has 993 million of inventory on hand. It had upwards of 1.5 billion of inventory. It really stopped production and is just trying to sell through existing inventory. It made a deal with Amazon and several other partners, whereas before Peloton was only selling its products direct to consumer. Now it's added some partners so that it can help boost sales, because it's become urgent for Peloton to sell through some of this inventory. It's got 900 million of inventory. If it can sell this to boost its cash balance, that would be ideal for Peloton. All right, so let's look at the valuation for Peloton. It's trading at a price to sales of 0.85. really the cheapest it's been according to this metric going back before July of 2020. It exploded all the way up to a price to sales over 18. It's cut down significantly since then, but I wouldn't say the stock is cheap by any measure because sales are going backwards and we don't know how much more sales are going to fall. The momentum is going in the wrong direction. Economies are reopening, and Peloton is having to really tighten its belt. It's pulling back on advertising, it's pulling back on new product launches, it's pulling back on new geographies, and so revenue growth is likely to remain muted for the near to probably even medium term. And so this is a dangerous stock for investors. Of course, the reward is there if the company can turn itself around. It's got a lot of really enthusiastic customers. The good news about Peloton is that when you buy a Peloton bike, you also buy a subscription to its interactive content, and those customers are very sticky. They're renewing their membership at a very high rate, over 99% when I last checked the customer renewal rate for those. So that side of the business is holding up well, and if it can rebound and recover its product sale, its hardware sales of the bikes, it can do wonders for the business, but it's incredibly risky. And in my opinion, the reward is not commensurate with the high level of risk right now. So I would say no, Peloton stock is not a buy for 2023. All right, that's all I've got for this video. Thank you for watching. I'll see you next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.